Okay, in this video, we're going to talk about 3 different crypto portfolio designs specifically for a bear market. And we're going to look at a safer portfolio, a medium risk portfolio, and then look at a more degenerate looking portfolio, because I know that's what all of you guys want, right? You want to see the degen high risk play. What does that look like in terms of like a portfolio allocation percentage? So that's what we're going to talk about exactly in this video. Now, a couple of things just to set the preface here before we get into the actual allocation. If we take a look at where we're at in this cycle, Bitcoin is currently trading at $20,000. And I personally believed that this was, this $18,000 wick down here when we had all of the big hedge funds going under and, all that stuff. I believe that could have been a bottom. And you may come back to this video and be like, this guy's an idiot. This wasn't the bottom. I don't know. I'm not trying to necessarily predict the bottoms. I just know that this is probably a really good point to dollar cost average in at. If you take a look at, history, back in the 2017 bull run, we came right up to about $17,000, $18,000. So that's definitely going to act as a strong level of support. And so I'm cool buying anything around here. I think that these prices are great prices to dollar cost average into. If we take a look at Ethereum, for example, Ethereum is currently trading at around $1,500. Maybe this was the bottom here at like $800-900. Again, I'm not trying to predict the market here, just letting us know where we are. So with that being said, let's take a look at 3 different portfolio allocations here. The safest one, I think, and probably the easiest way that you could think about this is you could divide the portfolio up into thirds. So if we do Bitcoin, we can do some Ethereum, and then we can also do stables or stable coins here. I think that, if you just want to make it really simple, 33% in each is great. I do think that Ethereum is going to outperform Bitcoin, but I think that having a little bit of Bitcoin exposure, a little bit of Ethereum exposure, and some stable coin exposure, I think this is a great safe bet. And a couple things regarding this, and you may think this is kind of boring, but sometimes boring is the best solution. There's ways that you can definitely make this portfolio more attractive, and that is by simply earning yield on these assets. And there's different ways that you can do this. One of my favorite ways that you can do this is actually through Curve. And you can see here the Try Crypto pool. This is basically a pool made up of USDT, Bitcoin, and Ethereum. So it's exactly what we just talked about. And you can actually earn up to 10.7% yield on it currently, which is really, really great because you're holding, blue chip safe assets. And again, the idea behind this kind of safer portfolio is that we haven't really got signals that, the market is going into this, big trend, right? We're going into necessarily a bull run, even though we have made some higher highs and we have made some higher lows here on both Bitcoin and Ethereum. We still have certain, things that are uncertain in the macroeconomic world to see what is actually going to happen there. So I think this is a safe way. Another way that you can do this, which I like a little bit more, is through gmx.io. And the way that this works is you basically buy their GLP token, okay? And that is basically an index of these assets. It's an index of Avalanche, Ethereum, Bitcoin, and USDC, basically. So you can see here the weightings. Basically, the target is to have 15% AVAX, 20% Ethereum, 10% Bitcoin, 5% Bitcoin B, and then 25% USDC-E and 25% USDC. So this is sort of close to our scenario that we were talking about, right? 33, 33, 33, not quite. It's a little bit more conservative, but we did throw AVAX in there. So again, it's an index of kind of these blue chip assets and stable coins, 50% in stable coins, which is a little bit more. But the reason why I really like this is because you can actually earn yield. And currently, you can earn a 25% yield actually paid to you in the AVAX token and in GMX, which is the native token here to this platform. Now, gmx.io, you may have heard me talk about this on my channel before. This is a leverage trading platform. So basically, when you buy the GLP token, which is an index of these assets. If these assets increase in value, then your holdings increase in value. But also, when traders are trading on the platform, you earn a percentage of the trading fees. So that's where those fees are actually coming from. They're coming from the revenue of this protocol, which I do really like. So this is our first portfolio. This is a safe one, maybe the most boring of the portfolios. The next one is like a medium risk play, okay? And this could be looked at like this, 25% in each one of these buckets, okay? And again, none of this is financial advice. This is just an idea. I think it's a way to make things simple and ultimately probably a good way to do it. But you could do 25% Bitcoin, 25% Ethereum. You could do 25% in stable coins. And then you could also do 25% in like the top 25 coins. Okay, so in regards to this, the key here is that, you're probably not going to hate yourself dollar cost averaging into some of these better well-known projects in the crypto space, right? We have Bitcoin, Ethereum, obviously 1 and 2, but you could pick a basket of say 5 or so of the top 25. Maybe you want to add in some BNB, the world's largest exchange. Maybe you like Solana, Matic, I think, is an interesting play. Avalanche, right? An interesting play. And even, something like Near is maybe an interesting play just outside the top 25. But maybe creating a basket of these, top 25 as well. Maybe you click, maybe you select 3 to 5 coins in addition to your Bitcoin, ETH, and stable coins. I think that's great. Now, in regards to, getting more specific with which assets to choose, obviously you need to do some of your own homework on that. But one other thing that I do think is important is the ability to earn yield on these coins. I like this because if I can earn 20% a year on, say, BNB, for example, I know that if the price of BNB falls by 20%, I've made that back up, right? And if I'm accumulating more BNB and earning yield on it at a lower price, then when price does appreciate, then the gains are even bigger because I've accumulated more of that asset at a lower price. So in regards to how to find out how to actually do that, I like to use a couple websites. One of them is CoinDix. So you can come here and you can look at just stablecoin yields, for example. If you're hunting for a place to earn yield on your stablecoins, you can sort by APY here. You can also sort by TVL, just like this, to see kind of where's more of the TVL actually located. So you want to find generally a mix between something that has a decent amount of TVL, but it also has a good yield, right? So maybe you look at this. It has $528 million in it. Earn roughly 9% on your stable coins. That's not bad. Also, Gains Network. You can basically deposit DAI and earn 9%. That's also pretty attractive. And then as far as picking those top 25, right, you can come in here and you could take a look at single stakes, for example, and you could type in something like BNB and figure out, where's a good place to stake it. I happen to know that Stater Labs currently is a decent place to stake. At least the rewards were high, still about 29%. This is a reputable platform as well. So this is something interesting. They also have Near staking. So if you were bullish on Near, you could earn about 20% on your Near currently, which is pretty good just by staking it here at Stater Labs. So I do like to see where I can find good places to stake or provide liquidity. By the way, if you're not familiar with how to stake or provide liquidity or earn yield, then come to Blue Edge Crypto on Instagram, DM me the word DeFi, and I'll send you this free masterclass that I did on DeFi. It's for free. There's nothing that, it doesn't cost you anything. And it's 4 video series within like an hour. You'll know more about DeFi and earning yield than pretty much, I'd say 95, maybe 99% of the people in the world, right? So go ahead and check that out. Now, another website that I really like to use for finding where to earn yield on these assets is Beefy. So you can come in here to Beefy and you can take a look at, stable coins, for example. Say you want to earn stablecoin yield, you can come here, you can sort by the yield. I can see I can earn 20% here. They also have a safety score, which I think makes it pretty good. You can see the TVL. This has a 10 on the safety rating, which is good. It has 14% yield, which is good. Also, you can also go ahead and just come in here, just kind of similar to how we're doing with CoinDix, and we can type in for example, whatever asset that we want to, type in there, and you can see the yields, right? Obviously with some of these, you can get some crazy yields, but you're pairing it with some, some coins that maybe you don't want to hold. So yeah, that's just, something for you to look into. This is interesting. BUSD, BNB, providing liquidity there. Maybe not horrible. I'd have to look into it a little bit more, but so yeah, this is how we want to use this, right? Is picking assets that we can also earn some decent yield on. Okay, and then lastly, we have kind of like our Degen portfolio, right? Which you could make up of like 20% of each one of these categories, right? For example, this would maybe not be full Degen, but for a bear market, I think this is, Degen enough for a bear market because, like until we start seeing some real heavy trends, then maybe you don't want to be too risk on, right? So you could do 20% stable coins. You could do 20% in Bitcoin, 20% in Ethereum. You could also do 20% in like those top 25 coins. And then you could do 20% in the small cap altcoins. So again, we've kind of covered these other 4 sections. Now getting into the smaller cap altcoins, you can come to a website like CoinMarketCap and you can search by categories. And I think this is one of the better ways to do this, is just find like a category that you're particularly interested in and start looking for smaller cap altcoins here. Let's just say, for example, like you're really interested in music and you don't mind learning more about music. You can come here and you can see some of like the different market caps here. You can see Audius is obviously number 1, has $241 million market cap, which some would still consider small cap, or you can see like really, really small cap coins here. But basically focusing in on a specific market sector is a good way to do this. I'll show you another way to maybe find some good smaller cap altcoins. Just come to a website like cryptorank.io. You can come to, say, for example, like Alameda Research, which is one of or A16Z or Circle or Pantera Capital. You can see some of these are Coinbase Ventures. These are some of the largest crypto funds that have full-time research teams that's constantly sniffing out and whatnot, trying to look for new opportunities. And so you can come in here and you can see what they're actually invested in, some of the protocols and different coins that they're invested in. And you can see there's 172 in here, and you can sort here by market cap to see, what are the smaller market cap, coins that they're actually invested into. So you can see them right here. These are kind of smaller cap altcoins. And then you could do this through several different funds. So try to find like, what is, see, like if you see a certain coin that shows up multiple times, that may be a good thing that you want to look at. So maybe you look at Alameda Research, and then you come in and you also look at something like, A16Z, and maybe you found something that, I saw this coin multiple times. And also, by the way, if you are looking for help on a portfolio as well as where to actually earn yield on these different assets, you can consider becoming a member at bluedgefinancial.com/crypto, where you'll get our portfolio, all of our yield farming plays that we're currently in, plus a ton of other cool stuff by becoming a member at bluedgefinancial.com/crypto. So in conclusion, here's kind of our 3 different phases, or 3 different portfolio designs that you could use during a crypto bear market. And if this video was helpful, please go ahead and like, subscribe, turn on the post notifications, and feel free to check out some of the other helpful videos on our channel.